Good morning, everyone. Welcome. My name is Jerome Carslake from the National Road Safety Partnership Program, and it's great to have you with us today for our second session in this Fuse Fleet and CRI Professional Development Series. Last time we focused on leadership and well-being. Today we're looking at tools, the technology helping fleets see risk earlier, taking smarter action, and supporting stronger insurer conversations. So this is really about collecting data. It's about translating insights into action and reducing instances, improving ESG performance, and unlocking better outcomes across underwriting and claims. So we've got a lot to cover off today. We've got three brilliant speakers, and we're going to have this as interactive as possible. We've got a bit of a framework that's going to guide us as we move forward. So to make sure we make this as interactive as possible, we've got around 40 minutes of discussion. I'm going to take questions as we go along. And just to note, you will get a CIP point for attending today. And you can see some guidance there. Now for functionality, if you want to throw questions in, the question box is open, as is the chat. So throw them in and we'll grab them as we move along. So heard about that. Let's check out our panelists. Well, as you can see, even from the image, there I am. Joining us, we have Johan. G'day, Johan. How are you going?
Very good, and it's great to be here.
Excellent. Now, we have a full bio on our website if you want to check these guys out, but just a quick sort of touching on, Joanne's super knowledgeable in the unique challenges facing companies in the region and passionate about helping them embrace risks, intelligence, or overcome barriers. So he's got a whole lot of skills coming in there. He's around transformation, business operations, and he's all around really helping contribute to safer, more sustainable roads. So a rock star.
Thank you very much.
Joining Joanne, we have Tanwir. G'day, Tanwir.
Hello, everyone. Good morning.
Now, Tanwir's actually had a couple of iterations with me over prior to this with Osmos and coming up to Dexo as well. And the reason being because he's a bit of a guru with telematics and fleet technology. He's implemented it into the power and water sector over in WA. And he's basically, I guess, using data, knowledge, analytics, those components around it, getting benefits of ROI from his amazing work. So another superstar there. Welcome, Tanwir.
Thanks for those kind words, Jerome.
And last but not least, we have Simon. G'day, Simon.
Morning. Good morning, everyone.
So he is the looks after commercial strategy for Fuse Fleet, and he's the EGM at commercial at DK Insurance Group. So he's been along. He facilitated the last session, did a rockstar job there as well. He's had a whole lot of roles in our NRMA, Bachelor of Science, from University of Wales in Cardiff. So he's come across and he's joined us in Australia because it's a lot warmer and more pleasant here, I dare say. But also another rock star. So welcome, Simon.
Thanks, buddy. Thanks.
All right, let's dive on in. Whoops, how's that? So first up, Joanne, your platform really helps insurers and fleets detect risk patterns using behaviour AI. How does it really work? And in contrast to sort of traditional driver score, mate?
All right. I'm going to try to give this as brief as possible because I love talking about this. So I can easily go on for 3 hours now. So, so what we look, traditional driver scoring is a really good tool for measuring overall how a driver is managing the vehicle and measuring big single events that a driver take. While we're purely measuring and looking at which driver is most likely to cause a crash, and we call that a crash probability, quite straightforward. So if you're out driving, for example, Jerome, we measure your driving every second, and we then create a pattern out of all your driving. So that would be called Jerome's pattern, for example. We compare that then to our database, and we see, have we seen a similar pattern as to Jerome's pattern before? And our AI database replies, yes, we have. And the accident likelihood of this pattern is XYZ. So that's how pattern profiling works. And that's what we are working with.
No, it's good. You use the term crash because I guess in the road safety environment, we refer to crashes instead of accidents all the way through, because what I'm hearing here is if you can really understand what's going on, because an accident is an act of God. When something happens you couldn't avoid it, but through your technology, what's going on, you begin understanding what's happening. So hopefully you can avoid an accident, and that's when it does happen, it's a crash, because it could have been avoided, I would envisage.
Yes, exactly. And we've seen quite a good correlation even with these smaller types of accidents as well, such as parking related accidents and this small, what's it called? Fender. Yeah. When you hit
Fender benders?
Fender bender.
Fender bender, yes, yeah. That's a very not Swedish word in that sense, yeah.
But it's interesting because on those small incidences that take place, how important do you capture the data just on the big ones, or do the little ones matter as well?
The little ones matters as well. So we are looking unbiasedly. So no matter how many, let's say, big events a driver is doing, we're just measuring their pattern. And we like to say unbiasedly because we don't look at who they are or where they're driving. We're just purely trying to look at, all right, so what is the accident or crash probability of this driver right now?
So how does your model work in contrast to traditional driving scoring?
So I'd say we don't purely, I think I mentioned it, but we don't purely look at such as speeding or acceleration or harsh braking and rank that. We look at more of a holistic view of a driver's or a whole fleet's pattern as well. So, and it's a very sensitive system in that sense. So a small change in a driver's behavior will have, and that's for good or bad. So a small positive change or a small negative change, you'll see the result directly from that driver then as well.
Okay, interesting. So what I'm going to do now is, whilst we're sort of talking, I'm going to launch a bit of a survey in the background, because I thought whilst we're talking moving forward, it's going really just understanding around, have you heard about a major claim? And we'll keep so people can just go ahead and answer those sort of ones. We'll open it up and we'll keep moving forward, and we'll explore as we move along. So what's one really one surprising insight you've uncovered that's changed how customers act?
So one that comes up straight here is, as I mentioned, we have a very sensitive system in that sense. We have a very sensitive, our data is very sensitive. So a small change in their behavior, good or bad, will have an impact on their overall likelihood of being involved in an accident. And what I find interesting is when we look at high-risk drivers, not all of them, but most of them, they don't drive high risk all the time. So it's not every single journey they take, they're driving with high risk. I can imagine this is something Tanwir sees a lot as well. They're not driving with high risk all the time, but you can see that it's certain hours of the day, it's certain days of the week as well, where their crash probability increases or decreases. And what we see is the more you drill down into this data, it usually forms a pattern on its own. So if I were to look at your pattern, for example, Jerome, maybe I would see, all right, your crash probability, it increases Monday mornings. That's a very typical one that we see. People don't like Monday mornings, I guess. I wonder why. And then it's changed from how you interact with the driver with this data is more of making them aware of how they are driving. So saying, hey, you are a great driver. We see you driving with a very good driver score or safety score. But we see Monday mornings and Tuesdays afternoon, it's especially high risk. Is there something happening in your life during these hours? What is causing your stress there, for example?
Yeah, I've got a quick question for Johan. It's a good point that you mentioned that, drivers don't always drive poorly, right? The cool technology that you have, what would you say the length of driving patterns you need before you can sort of reliably predict crash probability? Because a driver might be, stressed or fatigued or whatever for any other reason, driving poorly for a week, let's say, and you collect the data for that week. Would you say that, you would need a lot more before you reliably predict crashes?
Yeah, so we could, if we get one trip of data worth from you, for example, Tanwir, we can then analyze, okay, what is the crash probability for this trip?
Sure.
But as you know as well, risk changes up and down, and especially throughout the week as well, it will go up and down. So you probably need a bit more data. And that's what we usually recommend is a week, 2 week, or a month, a little bit depending on how the organization is working. But I'd say at least a week to be able to say, all right, this driver is very likely to have a crash. But if we just get one trip, we can say, all right, if you continue driving on this level on all your trips, then it's going, then you will. Yeah.
The more the better, of course, but you can sort of,
Johan,
exactly.
With Pathfinders, when we saw that pattern, I think it was 70% of the time the driver was at risk. They then actually had an insurance claim. So that we ran that report, I don't know, 24 months ago, maybe 12 months ago. That's the most powerful insight I've ever seen in my time in insurance, where high-risk drivers were flagged repeatedly, and they've actually then gone to have that accident. I think it was 70% of the times it was a at-fault accident. So in terms of seeing risk before it happens, that was when it sort of blew up, tiny little brains here at Fuse and CRI, and thought, actually, you can really use this to change the way they drive the vehicle. So yeah, that was a good example of seeing it before it happens.
Yeah, I agree. Yeah.
And
powerful.
And I think the other interesting point you make there on the Mondays, because I know in line haul and a lot of transport companies, it's the same thing. The data is that always the Monday going out. And they're only, like, you might retire from the weekend, that's also, but what you find during the week is you create habits and people get back into their rhythm. And then by the time they get it, and that's why something they go away for a shift, maybe 10 days, and it's always an outward going journey. That's always the highest risk on the first trip. Just drawing a little bit further now. We touched on a little bit, you've been talking a lot more around instances and crashes and those things taking place. What about the benefits from an ESG point of view, and how does that directly link to ESG?
So when we look at safety or being able to drive safe in a safe manner, that is highly linked to driving energy efficient. So it's not one-to-one, but it's usually 90-95% correlation or similarity. So if you're driving safe, you're also driving energy efficient. And when we look at ESG reporting and ESG reporting guidelines, I think, should I maybe do a quick overview of ESG guidelines?
Definitely. Far away on that.
Good, because I love talking about this as well. So I'm going to try to keep this one really concise, because this can go out of hand quickly. But ESG stands for environmental, social, and governance, and it's a framework for assessing and measuring a organization's impact on sustainability and their ethical impact as well. So it's become mandatory in more and more countries across the world, and it's now a reporting requirement in Australia. It will be phased in Australia, so starting with the largest organizations having to report on it. That's from this year, so it's roughly companies 500 million revenue and above. And then from 2027, it will be smaller, still quite big, 50 million revenue and above will have to report on it. And in these reporting guidelines, I'd say, they usually follow another framework, which is measure, report, and act. So you measure your CO2 emissions, you report on your CO2 emissions, and then you act on these CO2 emissions. And the measuring and reporting can be quite, well, for some organization, it can be quite simple and straightforward, but it's usually the acting that can be quite tough to do. And a lot of times it involves doing changes within your organization. And when we look at transportation and mobility, it's usually a lot of organizations I've met, they say, all right, now we have to switch from combustion vehicles to EVs now, because that's our way to act on this data. And that's how it comes in with the behavioral part on the ESG reporting, is if you start acting on your CO2 and fuel efficiency as well, you get that portion of the ESG reporting where you're acting on your CO2 emissions and being able then to measure it, saying, hey, we've had a decrease of an average 5% per vehicle over the last year. So we're doing our part to lower our emissions here. So that was quite concise, I think. Yeah.
Good job.
I know it's a big piece of work, and
it is, yeah.
Is there much of a difference? Because with the S and driving for environmental sort of focus versus safety focus, is it massively different driving?
It's usually 90 to 95% correlation. You have some instances where it goes complete opposite. So one example is, for example, if you're coming into an intersection and you've put up a bit of speed to be able to use that energy and roll through the intersection, from an energy efficiency standpoint, you don't want to brake before this intersection because you want to use all the energy that you have spent already. But from a safety position, well, you probably want to slow down because you anticipate there might come a vehicle out from the right, and you want to be able to stop in time if that happens. So it's in small areas like this where they don't correlate perfectly, but overall, they are very similar.
Nice. So that's fantastic. Thanks. And I just thought we'll share the results and we'll shift over and bring you into the conversation a bit more, Tanwir. So here we go. What's the first thought when a customer says they've never had a major claim? So I think everyone looking at the spread, a portion of them basically said, great, but I'd like to see the data. That's the top sort of one. So I guess, yeah, I believe that, but I need to check. And I think this is where, are they collecting all the information is probably one of the key things. Excellent, let's keep it that way. Was the next major one. Then positive, but near misses matter too. And then, oh, sorry, that was the bottom one. But lucky streaks, they don't last forever. Was the third one. So any surprises there, guys?
I mean, what data can you check? That's the problem. If you get a claims history and there's no major claims and there's no data telematics, you suddenly don't have data to sort of verify it, which is the challenge from a broker point of view.
And the big one, and I did a webinar just the other week with Darren Wishart around, and one of the things that popped up around near misses, for example, was people aren't capturing the near misses. All those little bingles, and it's like I think we touched on the car parks. You might keep hitting something in a car park, and then all of a sudden no one cares about it because it's just a little bingle. You're scraping something, and then all of a sudden you hit a child.
Yeah,
everyone goes, "Oh my God, we never saw this coming," but you had the data there, but no one was looking at it.
Well, I suppose, Jerome, as a broker, you can ask for under excess claims. So it's not something we generally ask for, but you can work out a frequency of under excess claims data, potentially then working out patterns from that. So maybe a broker question that we could ask.
That's a great one. So we'll throw that in the chat. How many people sort of thought about that or had those sort of things?
Particularly for, I mean, if we're talking larger fleets, 100 vehicles plus, they're likely to have a higher retention excess layer, and in some cases you can get worth sort of $5,000-$10,000. That's a lot of data that you're not necessarily asking for as a submission to the underwriter, but you can access that if they record it properly.
And I'd love to see some comments in the chat if people want to throw their thoughts in around that. That'd be great to hear. As we move in now to you, Tanwir, and Joan, I'll add you in this, and obviously all of you. We have this great question here from, how do you suggest brokers overcome client resistance to big brother concerns with driver data analysis and insurance? So that's a great segue to bring you into the data discussion, safe discussion as we move in.
Sure. Big brother conversation is probably the first thing that happens, right, when we implement technology and telematics. It's a great question, and I think anything with telematics or technology, that's where the conversation really needs to start. It's the culture, and whether the senior leadership team and the top down, how do drivers actually feel? Do they trust the leadership that the data will be used for coaching, improvement, and actually safety, like we all talk about? But unfortunately, in some organizations, it is used as big brother to monitor where people are going, to compare their driving to timesheets, for example, what time they're starting, finishing. And look, if that sort of thing exists systemically, that's where we sort of lose drivers' trust really quickly. So I think starting with or establishing a culture of trust is just so important in in this conversation, or in change management or rolling out technology.
Yeah, Tanwir, we've seen 90% of the time that's the case. People don't use it as a reward mechanism. We came back from the States, and the Americans are very good at looking at the positives rather than the negatives. So we actually changed the way we talk about it, because we're focusing on the 15% cause half the accidents, and that's a stat from greater than. But what about the 85% that drive well?
Yeah.
And really, you're telling off the whole room rather than, you know, saying, hey, you guys are doing a great job. This is why you're doing a great job. But hey, you guys, there's an opportunity to improve. So we've had to change our language across how we talk to our brokers and then talk to the fleets as well. Because of that point, you erode trust, and people don't want to do it.
That's awesome. And, you know, there's research, and Jerome's an academic, and he'd probably back me up with this. Research shows that any kind of reward conversation, or the carrot conversation, is more influential in improving driving. So, you know, a recent example, a client implemented $50 Bunnings vouchers for most improved drivers and the best drivers for the quarter. And it just gets, you know, gets people competing to be the better driver. Obviously we talk about gamification a lot. And it's a great example. It's not a huge cost at all. I mean, it's tiny, right? $100 a quarter, but psychologically it has such a huge impact. Rather than having the discipline conversation with 15%, you know, we just sort of opening that up, and all of a sudden everyone wants to sort of win that voucher. And like we said before, I think most drivers actually drive good most of the time, and they want to be better drivers as well. So
there's a US company linked it to their HR system, who then linked it to their bonus structure.
Wow. Yeah.
So that's taken it to a
cool.
higher level, but again, that's, you know, that's a significant way to change driver behavior. We're not quite.
The good thing as well, if it's vouchers, it's outside, you know, taxed on it. There's no, it can go through. And for a lot of people, with the cost of living and those sort of elements, it's directly goes, and it's a bit of a win if you're away from home quite a bit and you come home with a few vouchers to go shopping at Bunnings or Coles or Woolies. Once again, some organisations may have, workers may have preference not to have a voucher from certain organisations, so it's always worth checking on that. But I think it can really help in that homeward element if you can bring home. So look what I scored. It creates conversation at home with your loved ones as well. That's where this came from.
Absolutely, yeah, absolutely.
So Tanwir, question for you, mate, because you've worked with a lot of major fleets, and you're a bit of a guru around turning complex data into safety wins. Where do you see fleets struggling to move from dashboards to decisions?
It's a great question. I think there's a step before that as well. I think fleets struggle to actually move from raw data to dashboards as well. So I would say that, you know, there's a bit of underutilization of data, that it's recorded, and we've got such rich data available, to even go from that to doing something with it. Like you said, the example with near misses, you know, telematics is similar in a lot of organizations and the clients that I've worked with. I would even put the number at sort of 70 to 80% of organizations out there using fleet technology. The utilization of data is just so low for various reasons, you know, resourcing, skills, or whatever that might be, to move to dashboards, and then obviously the challenges from there to move to decisions, and that's to do with actionable insights. You know, I think there's just so much data available, and this is where, you know, Johan's Greater Than company, that they specialize in providing actionable insights, that small pieces of insights that just have such a huge impact. And you know, I think with leaders and fleet managers, I think they just need these kind of actionable insights, that they can make a decision on. They can speak to drivers, coach drivers, and yeah, So I think that's where fleets struggle. So I think it's a journey, and it does take time, from what I've seen as well, that fleets sort of, there's a maturity journey of about 2 to 3 years of making use of this data.
So, and that really touches on one of the questions we've got thrown up here. How long does a typical implementation take from sign up to actionable data? So do you reckon that's around 2 to 3 years, based on what you're saying?
I think I would say that's the maturity journey. I think signing up to a telematics tool and making sure the change management is done appropriately, I think that's probably about 6 months to put something in place, and then to mature from there to having really robust conversations with drivers, having drivers buy in. I think, getting over that big brother, building that trust. For me, that's about at least 1 to 2 years, I would say.
And Tanwir, we've seen that. It takes time. And the smaller fleets in the SME space, they don't seem as interested in change. And that sometimes doesn't necessarily fit us as an underwriter, but the larger fleets, it goes in their tech stack a lot of the time, and then it goes in their HR queue, and then so we have to be patient as underwriters and brokers to allow them to make the change, but you have to get that buy-in very early. But the SME space, and I'm talking fleets less than 50 vehicles, they seem a lot more resistant to change. They just want quick wins. They're a bit more price driven in our insurance world, and they're less likely to implement a lot of this change management. They don't have the staff. Most of them don't have fleet managers. They don't have, a key stakeholder. So a lot of this change does suit the bigger fleets and, 50, 100 vehicle plus, in some cases in the thousands, where you see a lot more complexity of risk. So it's just something we're seeing. So I'm not surprised to hear that, Tanwir, from your side.
I think that staffing, resourcing. Sorry, Johan.
No.
I think it's a challenge in this space because you have fleet people doing fleet stuff and HR, and you've got data analytics. They're all usually busy with ops stuff. So this gets the change management for technology and the analytics for technology seems to sort of get lost without ownership.
And I see as well, and you've probably seen it as well. It's because it can be scary, and that's for me as well. When I start using new tools or having new processes in my work, it's just about taking that first step. So once you've acted on the data the first time, I tend to see that after that things roll quite smoothly. But it's just about doing that first move, taking that first step, acting on the data that first time, and that's what I've seen can be the scary part, because it's something new that you're using.
And that falls on us to onboard as well. You have to onboard the clients with the broker so they understand what they're getting, what information, what it means, how can it, again, it opens up a small can of worms that you don't want to make too big, otherwise you fall into the too hard basket. And and it's a competitive world in motor fleet, in our world. So you've got to really add the value, and they've got to understand what's the ROI if I do these things, from a time perspective as much as anything, because it's not necessarily an extra cost. It's just someone has to manage it in a fleet of 30 vehicles where it's typically done by an administrator. It's an interesting world.
And that's why starting, I agree, is important, because like we said, it's a mature. There's a journey. It takes time, but starting is always a good point. It's never going to be perfect straight away, and that's something to realize, that you're not going to have everything perfect in terms of getting insights, getting driver buy-in, having all the policies in place straight away. I think it takes time to get there.
Having a champion and then having a used case. We did it with our business when we brought Greater Than into our journey, 2 or 3 years ago. The whole company, particularly the directors and the leadership team, all have the app, and we play with it and use it and talk to each other about it, and we compete and we question it, and we ring up Joanne saying, why have I got this terrible score? And so this kind of, and that's for me, is because I've moved house and I moved to a rural area, and my risks are higher. So having the internal champion, and in our case, myself and the directors were championing this change, but then having people use it and understand it, and then when you roll it out to the drivers, it's that kind of test and learn case. Which, back to your point, Tanwir, you just got to make that initial step, and don't expect it to be perfect. It's the enemy of great, isn't it? So let's just it's better than what is in place today, Jerome. So most fleets we talk to don't have a lot of risk management in place, hence why we went on this journey with greater than, and why we're talking about it today. There isn't a huge amount of risk management in motor fleets, so we're trying to change that and circuit break some of these increased claims costs. So that's why technology appeals to us, and we're trying to work out how to embed it best through our brokers and our fleets, because it is change and it is something different. And that's for us to explain and get everyone to understand the journey. So yeah, it's an interesting.
A key point that sort of came through over and over was the change management. So I think that's the key thing is, and look, we had a great paper we did years ago around this discussion paper touching on these sort of process, mapping it out and not leaping in. You need a proper plan to put it in place and bringing people along on the journey. So I like how you spoke around, you're testing it, the hierarchy, getting the buy-in, leadership, all those sort of components, making sure you got the right tool. It always comes down to what's the problem you're trying to solve as you're moving through it all.
Jerome, we have, if you sign up for a Fuse policy or a CRI policy, we have a kit that's been created through yourself, Tanwir, Johan, and all of our research. And it's a bit of a cookie cutter approach, how to engage with the client, what's the conversation, what's the problem we're solving. So we've developed a risk framework, and Tanwir really worked with us on that. So we can actually supply that as part of going on risk with Fuse Fleet. So we've kind of already asked those questions and already learned from our first 12, 24 months. So it's not something that, it's something that we're still learning and we're still getting feedback from our clients, but it's something we've developed and is available. So, you can take that on board with a policy now.
Tanwir, just before I move on to Simon, there's a great question here, which goes to nuts and bolts of what we're talking about here. And Johan and Simon, you probably have thoughts on this as well.
Yeah.
What percentage reduction in claims are you seeing due to the implementation?
I might just jump on that, Tanwir. Feel free to jump in. It depends upon how much effort they put into trying to change the risk. But best case. So we signed up to this. What we were selling that we can reduce the claims loss ratio by 20%. That was all the global research told us, and Johan can pop in here as well. But we actually saw in some cases over 50% change in claims. It hasn't happened consistently, and that's predominantly down to fleets all doing different things and wanting to try different things, and some fleets not wanting to do anything differently. So the fleets that commit to understanding the data, have the champion internally, everything we just touched upon there, I would be disappointed, bar a peril, a huge third-party claim. At least the at-fault claims were reduced by a minimum of 20%. And in the times when claims inflation is, 10, 15% in some cases, that 20% can make a huge difference. And that's potentially just year one. Obviously, you compound that. So that's kind of what we're seeing. Tanwir, Johan, I don't know if you're seeing anything.
I think that's pretty consistent in my world as well. We've seen Osmos and Sodexo last 2 years safety award winners with AFMA. They've had huge reductions in lots of metrics, and crashes was one of them. So, I think seeing 50% reduction in crashes is not unusual. Definitely.
Yeah. And I'd say that what you touched on there, Simon, as well, it's quite a near linear curve between commitment versus the outcome as well. Fleets that are really committed to using the data, and it's not that much that needs to be done on their side as well. But you see, they get the bigger the commitment, the bigger the impact on their claims reduction as well.
Nice.
Yeah, good question.
Well, what I'm going to do is we'll just move on to your side. But whilst we're doing that, I'll just throw a question. We'll come back to you on this one, Tanwir.
Yeah.
As I'm launching a poll now around what's the biggest pushback you've had about adopting telematics or AI, and we can float back into that as we delve in. So, Simon, question for you. And you've touched on a bit of this as we've been going through, but now we get nice and focused on it. You introduced the crash probability tool to help customers take control of preventable losses. So what really drove what drove you to do this?
Yeah, I think it just touched the point. They're trying to do something different, trying to be more risk focused. I mean, CRI has been around for 40 years. There's only so far you can push an excess up, and it's hard to change the risk without data. So, yeah, we've traveled the world, seen what North America is doing, Northern Europe, Asia, met Greater Than, who are a Swedish company, and these guys seem to be leading the predictive models. You've worked, Johan, I'm not sure if you can reference some of the biggest insurance companies in the world. I think you said you've been in AI for 25 years, which
Yes,
I didn't know I didn't know AI existed. I suppose Terminator 2 was around 25 years, isn't it?
the same time.
But we were blown away by the story, the data that you guys have got, and that's the hardest thing. No one has enough data to prove this out. So you guys you've proved it out multiple times over. So us experiencing these predictions and then seeing the actual impact is really proof in the pudding. So yeah, we're trying to produce a product that is competitive, trying to move away from price. That's the hardest thing we find. We can often quote, get multiple prices and not be the cheapest and lose out on a renewal or a new business quote. And we're trying to move the narrative away, basically, to protecting people and not just looking at claims loss ratios and then just throwing up a loss ratio percentage. So really, it's that needing a new product in the market as we pivoted from CRI into the general motor space, seeing what the rest of the world was looking at, and trying to really spearhead a bit of change and risk management focus. So yeah, that was a bit of a long-winded answer, but certainly covers off a few points.
Excuse me. It's interesting as well, because one of the hardest things in engaging with people around driving is people do it every day. So research indicates very clearly 85% of people think they're above average, which statistically is impossible. So how do you begin engaging with people around something that they do every day, and they may never had a crash? I teach my kids. I haven't had a speeding instance, but the list goes on. So how do you actually go through and nudge someone to actually say, well, look, there are ways you can improve? Is that where you see some of this sort of technology, this sort of approach helps?
Yeah, I mean, it's just, again, you manage what you measure. So, and then making it fun. Back to the original point at the start, it's not a witch hunt. You're not chasing the worst driver in the fleet. In a sense, you are, but you can't position it as that, because it really does change the way the conversations are. So you can find the worst drivers in the fleet and have that conversation with the CFOs and the brokers, but also going back to the gamification. How can you make it fun? How can you make it interesting? And then the ESG component is something we weren't across 12 months ago, and we're still sort of learning it as the regulations change. But sitting in broker meetings recently with large fleets and talking ESG makes it so much more of a different conversation, because it's a requirement and it's going to be mandated. Suddenly, the CFO is going, well, I've got this problem over there, and I didn't know you could solve it here with my broker. This is adding value that we previously didn't have, and that comes from data, and that comes back to the two pillars of greater than is crash probability and ESG. So, yeah, it all circles back to the reason we got on multiple planes and traveled the world to find out what does everyone else do, and no one's great at it. So we figured that we could take a piece from everybody and produce something hopefully best in class, competitive, with the right sort of tools around it. So yeah, I mean, again, hopefully it answers the question.
I think it certainly does. And look, I'll just share these results now, which sort of highlights the benefit of this, because the biggest pushback, everyone, and it doesn't surprise me, it's too expensive now, and drivers won't like being monitored. So they're always the usual two that sits in there. Back end, too much data to manage, but also at the anchor, as I mentioned, we're already perfect. So anyone who says we're already perfect, it's like, I've done elite rowing and coaching and everything like this. And one of the things I believe is you create habits by just continuing doing things, and you don't know when they sneak in. And because you always think you're great, all things are going along, unless you can actually measure or have someone coaching or pointing it out, those habits become the norm.
Yeah.
And you don't know when those bad habits have become the norm until someone brings you up and checks on them.
Yeah, and this is where, if we go back to the culture conversation, and if the culture is open and one of trust, you can be transparent with drivers, and drivers actually they love seeing their own driving data. So, they've always thought, like you mentioned before, that, a driver may have always thought that I'm a great driver, I never get speeding fines, I've got all my points, don't have crashes, so what do I need to improve on? But a lot of drivers are surprised when they see detailed data. And I think if the culture is of trust, you can openly share that data, you can be transparent with them. Most drivers I speak to, they want to see more. They want to get a frequent report. Osmos is a great example. We started sending weekly reports to drivers, and they said, well, maybe weekly is not even enough. We would love to see them twice, so that we can really understand what we were doing and how we were driving, and we would like to be better.
And I think the other thing people don't realize, one of the unintended side effects of when you bring this in is the mindful, the headspace of those sort of components. Because if you're doing it, you're giving permission to your drivers to drive to the speed limit, to drive to the conditions, to take the pressure's not off them. You go, look, you're going to do what you can do. And I know, like I use the line, or research has indicated, the way you drive is the way you live, which is the way you work. All of it sort of interlinks together. And the people who actually drive and perform and have the lowest risk have the highest levels of life satisfaction. And when things are out of balance, your scores get worse and worse. And that quite often means things happening at home take with you when you get inside the vehicle. Because when you're driving, you have a chance to ruminate. Things, a molehill becomes a mountain. Things which can pop up, and a lot of people don't. The vehicle becomes an extension of how you're feeling.
Yeah.
Yes, that's something you're really right there, and that's something we see a lot. That psychological or things that happens in someone's private life, that affects the risk a lot. So it's not necessarily that you are a poor driver, they don't know how to handle the vehicle. That's quite rare to see, unless it's someone who's just about to take the driver license. But bring in,
Johan, I moved recently from the city to the regional area in Central Coast, and my driver behavior completely changed. And I think internally I got people taking the mickey out of me because my scores halved from, and I didn't think I was driving any differently. And isn't there research to say moving house, and everyone knows it's one of the most stressful things, particularly if you live with me, can really affect your driving scores? Is that something that you've seen across research, Jerome and Johan?
So I can say, especially when you're moving house in that sense, because I guess you tend to drive mostly from home to work, and you drive that journey 10 times a week or 5 times a week, and you become quite proficient in that specific journey. You know when the intersections are coming, you know when vehicles tend to speed up or you should slow down. So you become one with that specific road. But then when you move house, it's a completely new road. There's curves and there's intersections that you're not prepared for. And it takes some time to settle in, to become familiar with that road as well. Yeah. So that's usually what we've seen as well. So when you move, it's good chance that your crash probability increases. Yeah.
So if you had a new employee in a new region who didn't know the area, the probability would be there'd be high risk. So I suppose from a broker and the rider perspective, we can use that information to, inform companies around potentially, because it's back to, I think we talked about some previous webinar, Jerome, onboarding of drivers. We typically see in our world, particularly in SME, is, utes, 50, dual cab utes for tradies, and they provide zero driver training, maybe driver policies sent digitally that no one ever reads, and they've been given $100,000 dual cab ute. That's pretty much it. And some of these drivers can be in their early 20s, male, which we know is sort of a higher risk. So yeah, there's a lot of informing that we can do to companies when we talk from an underwriter's and a broker's side. But yeah, just a bit of anecdotal evidence there around the types of customers we're seeing and the little risk management that's provided to these guys.
And you've probably seen that as well, Tanwir, when it comes to like within logistics space, in that sense as well. When a driver is given a new route, you can probably see, not in all cases, but in some cases, that they're not that familiar with that route as well, and that their driving will have a change, good or bad, in that sense.
Yeah, and I think this is where, you know, using data is important, right? Because data can tell you the anomalies in trends. So I think we've talked about this before, where it's not necessarily always about consistent poor driver behavior. You know, you could have really good scores and everything is good, but if you see a spike in something, so in scores or in any kind of metrics, I think that also becomes an actionable sort of insight.
And it could be just checking as how are you going, what's changed, because the other part in shifting homes, back to your point earlier, Simon, obviously there's different routes coming in, but there's also probably getting greater fatigue and tiredness because you're getting home, you're unpacking, you're moving, you're settling in, and even just when you move into a new environment, your brain's not settled. It goes back to hunter-gatherer sort of periods as well. You're more alert. So there's a lot of these other things going on as you sort of shift. And just before we move on, we've been touching on this a little bit, but how can insurers and brokers really help these insights gain traction across the fleet? So we've been giving all these examples. What would be a couple of really great grabs would you throw at them, you reckon?
The proof's in the pudding, really. If you can check, if a client has a high claims, there's a lot of clients that come to us with a lot of claims. So there's a problem to solve. And if you can reduce the claims, and again, this is the journey, you've got to commit to, hey, I want to do these things. I can't, because companies can only pay so much, and then insurance becomes unaffordable. So I suppose the proof in the pudding is, you know, let's actually make some changes. We can demo the kit. We can show them, you know, how we'd analyze the claims, what the reporting looks like as part of the pitch when we're talking to brokers. Here's what we offer, etc. Here's a load of videos on our website. This is what we do. So the client understands that when they're looking at 4 quotes and they go 1, 2, 3, 4, and they actually see the value in what we do and what we do differently. We're really hoping, and this is a big hope, that it changes the conversation away from, hey, these guys are 5% more, but look at what they're going to do. Look at how they're going to help you. Here's the framework that Tanwir helped us develop. Here's the best-in-class technology that Johan has helped develop over 25 years. And here's a great solution, but hey, look, it's going to cost you 5% more. So, and that's hard because the lower end of the fleets are looking at how to reduce my costs, and they just want to upfront saving. And we're saying, well, pay a little bit more, but here's your longer term savings. And that's my job and the business's job and the broker's job to convince the client there's a different way of doing this. Back to quoting my colleague Ruin, it's a circuit breaker. Your claims go in up every year. The inflationary costs are going up every year. We just keep changing your excess, which means the client pays more money. But the root cause is the number of accidents. As accident rates are increasing or stabilizing with inflation, your costs go up. So how do we change the root cause of the problem, driving behavior? So it's not easy. And again, it's the salespersonship of what we do, but it's understanding the value, the risk management, and the overall solution is available, but you know that you're going to have to make some commitments.
Tanwir, Johan, any other thoughts?
I think that cost one, you know, we talked about technology being prohibitive. It's an interesting one because it's not cheap. The technology is not cheap. And we've talked about it being a journey. So the ROI takes time. You know, it could take up to 1 to 2 to 3 years even to see real benefits. But I think the starting with safety, what it does is it has all these flow-on effects. Johan talked about ESG, so you know, having an impact on fuel use, impact on unplanned maintenance. You know, you start seeing a lot of other benefits when you start with the right culture, when you start with the right philosophy of using technology. And then obviously the flow-on benefits on claims and premiums as well.
And the people. there's a big people risk in these vehicles.
Absolutely.
And we'll talk about fleet insurance, but the impact on all the associated risks around it, Jerome, you probably have stats around, after an accident, what that impact is from time off work, all the factors, the associated liability risks, the corporate officers, everything's associated with. A broker called it a moving bomb the other day. They will have claims, they will have accidents. So it's not just a simple fleet cost that goes up. What about all the associated people costs that come with it?
And that's what for every dollar, I think it's indicating, it's like for every dollar that an insurer pays out, there's another ranges between $5 to $55 of indirect costs the organization incurs. So, and there's a plethora of what they include. But we've got that. You touched on ESG, so let's delve into that. And we had this anonymous who've been sitting there patiently waiting for your question that's been sitting up here for a while. So how can we use these tools to help fleet owners meet ESG reporting requirements? We've spoken about how can we do it?
I'll jump in and take that one because I love talking about ESG. I'll talk from mine and Fuse/Simon's perspective here. But as Simon mentioned as well, we measure a driver's impact on the road from two perspectives. So one is what their crash probability is, and one is what their climate impact is. So the tools that are out there, the data that is used to measure their crash probability is the same data that's used to measure their climate impact. So if you're already on board with Fuse, for example, and you're already getting all this data as part of your insurance, it's as simple as a press of a button to then start measuring your climate impact as well. And then reports can be created with this, because we use the GPS data then to analyze how much has been driven, with what vehicles, what's the fuel in these vehicle types, and then how much has been saved or over consumed thanks to the driver's impact as well. And then a report can be generated from it. So I'll try to keep that one concise as well, because otherwise I could talk a lot about how these reports work, but they're quite straightforward in that sense.
And I should also point out, like, it is actually some mandatory reportings coming in, depending on the size and sphere of company. It's going to increase over time. So companies are going to begin asking, well, what's the largest emitter that they're facing? It'll be the vehicles, wouldn't it?
For a lot of organizations, yes, it is their vehicles. So of course it depends on the size and how many vehicles they have and what industry they are in. But for most of them, the vehicles are a sizable chunk of their emissions. So they would then have to report on those emissions. And that can be really simple. So it can sound tough to report on your emissions, but we've tried to make it as simple as possible to help them with that.
Doesn't it apply to contractors as well?
Yeah, exactly. So the scope, there's different scopes for what type of emissions it is. So just very high level, it's indirect and direct emissions, and you have one more than that. And for a lot of these larger organizations that have to report on their energy consumption, CO2 consumption, they also have to report on their whole value chain. That will be phased in as well, I think, from next year. I have to double check that. So then they would have to report on their suppliers' CO2 emission as well. So if you are contracted by one of these companies that has to report on it, it's quite sleek if you then already have your ESG report ready. So if you're up for a tender or an RFP or whatnot, and then you can say, yeah, we're already measuring our CO2 emissions. So working with us is easy. That's, high level for how that would work.
That's a nice sort of point of difference. Here's my template, here's my history that we're going through, and make life easy.
Yes.
And Tanwir, is that some of the stuff you see as well that you've been sort of working with organizations?
Yeah, definitely. I think also using advanced technologies with telematics. A lot of devices these days measure accurate fuel consumption from the vehicle. So then that becomes quite straightforward to at least measure that portion of ESG. There's obviously other other areas like Johan talked about, but at least from the vehicles, if we have the right technologies, there's no need for estimation, and you get accurate fuel use, and you can use different factors to measure CO2 emissions, which we're also finding that one of my clients is a contractor of a big utility, so they're having to report fuel and emission use monthly already.
So where would you go to find out more about ESG reporting, mandatory reporting?
So you're always welcome to call me and ask me about it. But if you don't feel like that,
our website has an update now with all the requirements on the Fuse Fleet website.
Yes. So checking out with Fuse Fleet on their website, there's a lot of information there.
Nice.
And obviously government websites will be the most current form, no doubt. Or ChatGPT, which I'm sure a lot of people use for their admin.
Coming up in the last sort of 5 minutes, we're just opening up now for broker conversations. And Felix, you've got a couple in here, so I'll dive into them. How do telematics-based risk models distinguish between improvements in driver safety that result from driver behavior versus those enabled by advanced vehicle technology such as ADAS and semi-autonomous features? And what adjustments are made to ensure that risk scores fairly reflect the human contribution to safe driving? Interesting question.
Thanks, Felix. I'm going to cancel your ChatGPT.
Very deep
Yes,
question.
yes, yes.
Right? There's a second one as well to come.
Yeah.
Oh my God, that is a very...
Felix is in my team, so thanks for that, buddy. It's complicated.
I can say that
you probably have more experience, Johan, on the
yeah, from our perspective, we don't necessarily differentiate. So that's in the sense that we are unbiased. We're not lowering or increasing your score depending on what ADAS feature you have. So, and we can see that when we just benchmark vehicle to vehicle, what is the average crash probability on vehicle types? We see that there are noticeable differences between different vehicle types. And that's usually a mix and match as well from different drivers. Some drivers drive safer with certain type of vehicles, and some drive safer with another type of vehicle. So we don't change the score depending on the ADAS. So, and with most ADAS feature, they will improve the driver safety as well, and will have a positive impact on the crash probability score. So that's something fleets can see quite quickly with both data from me and Tanwir there as well, that you probably see a decrease or an improvement if you bring in new types of vehicles with really good ADAS feature into it.
Yeah, and I think that the key thing is to use that as a complementing technology. I agree. I think that I usually haven't seen them being distinguished either, or scores really being updated too much to factor in ADAS technology.
Yeah, I've seen the only one that I can bring up some data on now is the cruise control has not, and especially on energy efficiency, does not have a positive impact on energy efficiency because you keep limiting or increasing your speed of the vehicle. So it's better to pay attention on the road and keep a foot on the gas, and that's both from safety as well.
So what are insurers sort of starting to do with the sort of data now in a predictive sort of sense? How are they sort of looking at rolling that out? So how do you use it for, I guess, how are they using to improve their clients, to engage with them in a predictive sort of sense?
The actuaries own insurance. At the moment, they haven't necessarily got enough data here in Australia to dynamically price yet. So that's the journey we're on, and it's frustrating, but it's part of what we do. And Johan, your company's been around for 20 odd years. We're developing data sets to be able to, at some stage, be able to dynamically price with this data. So that really, for us, will be the next step. At the moment, it's about risk managing, applying potential discounts on policies that agree to, hey, I'm going to do these things. Almost like saying, here's my submission, here's my plan on a page. As an underwriter, we have obviously got flexibility on discounting. So it's at early stages, but where we want to get to is to be able to get fleet scoring and look at true exposure based on the data rather than just, you know, types of vehicles and pure claims. So yeah, we're kind of challenging the status quo, but that comes with having to build up a data set, and we're in the middle of that at the moment. I think we're running out of time, Jerome.
We are. So what I'll do is just quickly, just each, and thank you so much.
Yeah.
I'll get you just quickly saying, look, 30 seconds. What's your take-home message? So Johan, what's your take-home message to everyone?
I want to reiterate that because it's quite easy from our perspective that you always focus on the drivers that has the highest likelihood of being involved in a crash. But it's something that both Tanwir and Simon mentioned as well. It's equally, if not even more important, to also focus on the drivers that are least likely to have a crash, that's driving really safe as well, and to reward them. So put a big focus on them.
Tanwir, I'd love to hear from you. What's your thoughts?
Along similar lines, I think if we start with safety and that conversation that, you know, all what we're trying to do is get everyone home safe every single day, everything else sort of starts to fall into place.
Nice. Thanks, Tanwir. Simon?
Well, I think just that circuit breaker, there is a solution that exists, and I suppose it's our mission in our business to get the message out there that, you know, we're here to help. We have 40 years worth of experience in the motor fleet space, but we've really lent into the technology that should get drivers home safe and be able to predict when an accident happens through using the partnerships we created. So yeah, reach out to me. People have got my details. I'm on LinkedIn and various emails. So yeah, I'd love to talk to people about how we can help change that risk.
Nice. Well, thank you, Johan, Tanwir, and Simon, for a sharp and practical session today. It was great having you on board.
No, thank you.
Thank you, guys.
Thank you very much.
Thanks for joining.
For brokers and advisors, this is about helping customers move from lagging indicators to leading action. The right tools and insights can help reduce exposure, improve insurer relationships, and align with broader ESG goals, all without adding complexity. So I think we could have spoken about so much more today as well, but time has run out. So thanks again for being part of the session. Stay connected and keep leading these conversations forward. Thank you all very much for joining us today.
Thanks, guys.
Thanks, everyone.
Thank you very much.
Guys, awesome. Thank you.